how much more weakness is there in stocks?
Oh, you could see considerable downside shift here within the financial markets on the equity side. But what's odd is that you're not seeing this translate into the credit markets or the long end of the yield curve that much. You'd expect with this type of selling pressure, the 10-year to be closer to a 250 handle, not a 275-ish handle. So we're advising and we're placing our bets. We're moving up the quality spectrum. Every time I'm on, I've been saying that. And we want to be more balanced within the portfolio. We want to keep our duration somewhat more shorter in relationship to our benchmark.
Why?
Why?
Meaning that would imply that it's fundamental versus the price setting the narrative versus the narrative setting the price. And it feels like it's a technical, not fundamental story.
No, it's sort of both, okay? Let's go through this a bit, okay? For 10 years, we've had monetary policy here in the United States and across the globe below the rate of inflation. So that has been such an extraordinary impulse into the system with asset inflation that now you've gotten to a point where the Federal Reserve and other central banks are indicating that they're going to be lifting rates, reducing their balance sheet. That's one aspect of it, but that's not the fundamental economics backdrop. The fundamental economic backdrop across the globe has been quite vibrant based off of credit growth, i.e. emerging markets. Now that you're starting to see somewhat of a modification there. I'm not talking about China going into a recession, but a deceleration. So you're starting to see high-frequency data points coming out that are somewhat less robust.
But on the other hand, the fundamental backdrop is earnings growth expected to be very high for this quarter. We have a great chart that shows the earnings revisions since the end of March, and you see that they continue to climb higher for all of this year, as well for 2019 versus the beginning of the year. Tech, in particular, could see almost 30% earnings growth. How do you square that with the downdraft? That's
a wonderful question, and you're 100% right. Hence the reason why the market moved over 20% last year. Remember, the market moves with a forward-looking view on earnings, and you've seen not only that, but tech is expected to earn EPS of over 10%, revenues over 8%. I mean, this is about a valuation perspective, and you're starting to see the yield curve move higher here in the United States, which is basically becoming a much more competitive asset class.